So the big question is this: how are real estate investors who don't have a ton of free time, don't have access to off-market deals, and didn't start life on third base, how do we grow a real estate business conservatively to support our families, finally leave the corporate rat race, and build a legacy? That is the question, and this podcast will give you the answers. I'm Ed Matthews, and this is Real Estate Underground. This is the Real Estate Underground podcast show number 76.
Greetings and salutations, Real Estate Undergrounders. This is Ed Matthews with the Real Estate Underground. Thank you so much for joining us today. Today is part of a conversation that's more or less in my wheelhouse because I always love to meet sponsors and syndicators and multifamily investors and folks that help other investors achieve financial wealth. So we invited Neil Timmins from Legacy Impact Investors here. We were just having a conversation offline about how beautiful it is where he lives out in the Des Moines, Iowa area. And so, Neil, welcome to the show, and we're really happy to see you.
Ed, thanks so much for having me here. I appreciate it.
Absolutely. So Neil, one of the things that I had noticed about your business was, you have this concept of riches in the niches and 20x. Opportunities, right? And so, for those folks that haven't visited your website or heard your podcast, why don't you tell them a little bit about your business and who you are, and then we'll get into the details of it.
Yeah, as you mentioned, I'm beautiful Des Moines, Iowa, right? Come for the people, stay for the weather. Yeah, it's terrific. And so, born and raised here, and got into the investment. Well, really, let's call it the real estate industry. 18 years ago, almost 19 years ago at this point, and started in single family, and then was an agent, worked my way up in that world on RE/MAX for a number of years, and then eventually found my way into investing and commercial investing about 5 years ago. Yep. And you hit on the head. I affectionately call what I do, what you do, what we do in the commercial space 20x, because the single family home space, if you will, buying a rental property, the goal there is, can I earn $100 or $150 or $200 a month? The national average is probably somewhere around $150 a month. Right. I want to be at least 20 times that when we do a deal on the commercial side relative to our monthly cash flow. It's so much easier. So much easier for what we do in comparison to the single family space. And I can tell you that from firsthand, from living that experience, being fed that, I'm going to call it a lie, being fed the lie to go single family is where you go. It's passive investing. Listen, you can make a lot of money there, but it's anything but passive. There's nothing passive about it. And so my team focus on commercial investing. I love industrial properties here in the Midwest.
Excellent. So, coming from the single family renting or residential, what pushed you over to the industrial as an asset class?
Yeah, good question. So it was I'm ballparking about 5 years ago, I'd bought a number of rental properties and got to the point where I was going, this isn't really going to get me to where I want to go. Okay. And I got presented with an opportunity from a broker for an industrial property, and I evaluated it. I didn't know a lot about the commercial space, although I've got a finance degree. I can do numbers. I can do a spreadsheet. I can get my head wrapped around that. And I'm an absolute consumer of information. So when I launch into something, I want to study. I want to understand it. I want to master it, because that's, the mastery at anything you specialize in, pays the most. Yeah, so I want hours, right? Yeah, that's exactly right. Malcolm Gladwell. I want to understand it. And so presented with this opportunity, sunk my teeth into it, could get my head wrapped around at a high level real quick to go, all right, well, this seems like it makes sense. The risk reward is well in line. There's significant tax benefits. I've got a tax problem, right? Largely flipping houses at that time. Yep. I was going, all right, let's do the deal. And then, I get 2, 3, 4, 5, 6 months into the thing, and I'm going, I never hear from this tenant, and it's triple net industrial, and I'm the property manager, right? Right. I'm going, I think I'm onto something here. And so from that, it led me, my comfort level is largely my backyard. Now that's expanded to the Midwest as you get more comfortable inside of the asset class. Sure. So I bought everything. I bought industrial, bought retail, bought self-storage, bought mobile home park. A number of asset classes done well in all of them, but industrial is really my favorite.
Okay. And is it because of the triple net factor or something else?
Two functions. Yes, triple net factor, and the demand for the space is tremendous, and it's good. It's continuing to be significant. Onshoring is a big deal, or reshoring, whatever word you want to call it. The ability to take back from China all these manufacturing things. Yeah. What happened during COVID? I mean, a number of things, but one of them being that our supply chain is largely broken, and it's a real challenge. And so there's a lot of reshoring that is taking place right now. A bunch of manufacturing jobs coming back to this country, and there's additional demand for space. And not all that space means 100 to 500,000 enormous buildings. A lot of it is buildings that have been around for 10, 20, 30, 40, 50 years that are still functionally sound and can be operated and put into really significant use in very good shape.
Excellent. And so, in terms of the returns, 20x, wow, that's a big number, right?
Yeah.
How do you, when you're talking with investors and asking them about, what's important to them and their goals, and, how are you couching your track record in terms of performance relative to asset class?
Relative to asset class. Yeah. I mean, we're lay out exactly here. When I talk to an investor, it's going down obviously what their goals are, what they want to achieve. And then, when I provide examples, lining those up with what it is that they seek to achieve. So for some folks, it's passive income. They want passive income. It's not about hitting a home run. It's about making sure that there's a return of principal, that things are steady. And we've bought investments. A Dollar Tree comes to example that is steady Eddie. It's very right down the middle, and it's just going to produce cash flow month in and month out. And then there's other opportunities that we do, value add components, to where we're going to go in and make some changes. So what comes to mind is a strip mall that I bought. I'm ballparking, say 4 years ago, somewhere in that range, 3.5, 4 years ago. Multi-tenant, about 11 tenants, about 10,000 square feet, and bought this largely with the value add being we could cut expenses. So there were a number of things inside the leases that were just not being enforced. For example, insurance and some of the CAM expenses that the previous ownership just didn't pass through, even though the leases allowed it to be done. So we come in, make that change, pass through the expenses that were agreed to by the tenant back to them to go, all right, well, you guys agreed to this. Now you actually have to pay it. Yeah. Now you actually have to do it. Some low hanging fruit, like, my favorite's the garbage contract, right? Just garbage, just a dumpster. Well, oftentimes we can shave, 20 to 30% expense just in renegotiating the contract when we buy a property. Right. Put that at a cap rate of whatever the cap is, whatever the prevailing cap is, 6, 7, 8, 9. It's real money, and it adds up real quick. And very so quickly. that one was some low hanging fruit. Went in, extended some leases when they were up for renewals. Nothing particularly significant on the revenue side. It was really just cutting expenses, driving that NOI, and then selling that piece. And that piece sold for, almost double what we paid for it, roughly 3 years earlier.
Wow. Congratulations. That's phenomenal.
Yeah. No, thanks.
So, I'm curious, you have a finance background, right. And, you could probably have a lot of different jobs, right? But you chose real estate. So what is it about real estate that that kind of gives you that juice?
Yeah, it's a function of I think two things. One, I can use the finance background, that kind of a love for some numbers to understand that, and then deal with something that's real.
Yeah.
We live in a world where it's tangible. You can go there, you can see it, you can feel it, you can touch it, you can deeply understand it. I recall back to my days when I graduated from college. I went and became a banker with a very large bank here in town. And I was there a couple of years before ultimately entering real estate. And I really loved investments. So I'm going to back up one more and tell you this, then I'm going to come back to this. So I went to University of Nebraska at Omaha. So I'm born and raised here, went to school over there, played football. So that's how I ended up over there. Every day for 3.5 years, all my time there, I drove by Warren Buffett's personal house.
Yeah.
2 blocks from school, drove by that. So, and loved investments and studied Warren Buffett all the way through school. Cause you can imagine just just blocks from campus. His name was a big deal in that city and in that school. Talked about
Absolutely.
nonstop.
Yeah, I'll bet.
And so, I always thought, I want to be in investments. So fast forward back to when I was a banker, then I started studying and becoming a licensed stockbroker with the bank. So doing some things down that investment path. And one of them is sitting for my chartered financial analyst, a CFA exam. It's a 3-part exam, only offered once a year for 3 years.
Yep.
To be able to qualify for this. So I sat for my first one when I was at the bank. They paid for it, thankfully. And one of the questions going through, it's a big, not easy test, and you have to study a lot for it to be able to do this. I sat for it, and one of their questions on there in the study guide, another exam was, they're talking about risk and reward.
Mm-hmm.
And one of the things that they indicated was, unlike the stock market, where every risk and reward is largely the same, meaning that it's baked in. If you want a big reward, you got to take a big risk.
Right.
Real estate's not that way. So they even said, it indicated in there, and it's stuck for me, and it has stuck for me to this day, is that you can actually get a significant reward without the same level of risk in real estate. People's experience is very different. Your ability to execute on a business plan, information is not communicated in the same way, meaning if you and I may look an opportunity and we may know different things about that opportunity than one another. Therefore, our risk profiles are very different from one another. So your ability to get a significant upside, asymmetric really return is significant. And I think that's one of the things I love best about this business is that, you can get big rewards and it's super tangible. It's not making up, to do that building has a real expense. They just didn't print another stock certificate and sell that. Right.
Right.
It's real.
Yeah. And so, in terms of your business, how big is your team? What does your team look like? I'm just curious how you put it all together.
Yep, there's 5 of us. And so we do 2 things in my office. We still fix and flip homes. That's kind of a bread and butter. I'm involved maybe 2 hours a week in that business. So I'm largely not involved in that business just because we've done little over 200 deals at this point. Wow, about 175 with the exact same contractor. Wow. That's the secret to that business, right?
Yes.
It is. So find much. So find your guy, get it dialed in. I was commenting to somebody this morning. I was speaking with him. He was asking me about that. I said, I hope you like gray because gray is the only interior color that's ever been painted in any house. That decision was made like 6 years ago. And there's no do we pick light fixtures? That was all decided years ago. Nothing has ever changed.
Exactly. Yeah. We're the same way, Benjamin Moore, paper white everywhere.
Yeah.
White trim, semi-gloss, the whole thing. Right.
Yeah, exactly. So I've got my right-hand Cal. She's in charge of doing a couple of things. She connects with our investors as well to raise capital from folks. Does a number of our writing pieces. We publish a number of content pieces. So largely heads up our content management components. I've got a transaction coordinator, so she handles everything from contract to close, both on the house side and then on the commercial side, our investment piece. And then we've got an admin person who's part-time here. And then we've got an acquisition person. So I do acquisitions as well, along with Clint in my office who does acquisitions. Okay. So constantly focus on finding new opportunities for us.
So transaction coordinator can mean different ththings to different people. So I'm curious, in terms of your operation, what does that mean? What does that person do?
Yeah. So anytime for due diligence, for example, she executes our due diligence plan. We've got it, of course, templated out. When we transact in something, here are all the things we need. Her job is to go get everything. Okay. To make sure she's in constant communication from contract to close to make sure every deadline is hit. When's earnest money due? We got to make sure we hit it, right? Request the funds to be drawn. Due diligence, and then all the intricacies of due diligence. There can be a lot of components to due diligence. So things like phase 1, for example, she places the order. Things like a property inspector, she places the order, makes the arrangements, all the details, dots I's, cross T's. She's in charge of all that. And then to assemble it, it gets rolled up and then gets reviewed and evaluated and decisions made at the next level.
Right. And that's you, or is that somebody that works for you?
Yep. No, there's typically me. Yes. Okay. On occasion, my right-hand gal will go through that, or the acquisition guy will take first pass at it if he was lead on the deal. Yep. But eventually I see everything.
Okay. All right. And then in terms of acquisitions, so, a lot of different people have a lot of different ways of identifying deals, right? And so I have my own preconceived notions, which I'll share later. But
I love it. Good.
But in terms of your deal flow, how are you creating deal flow?
We've done two things, and I'm going to tell you what we did do and now what we are doing. How about that?
Fair.
So what we have done historically in the past is worked off market, with direct to seller. Direct to the seller, identify what it is that we're going after and going down that avenue. Now, what has happened for us and why a pivot is because we were successful at it, but we ended up with a lot of smaller deals.
Okay.
And so now we've gotten to a point where I'm going, okay, these are great and they're wins, but we want to move up to another level.
Yeah.
And employ some more dollars and cents, both from my standpoint and an investor standpoint. And so that's required us to do things, right? Not what we're going, what we're doing isn't going to get us to where we want to go. So that requires a different action. And so that for us means broker relationships. And so we're proactively seeking out and connecting with brokers who line up and specialize in the markets that we want to do it in and the asset class we want to do it in.
Okay. And so when you say connect, are you talking about dialing for dollars? Are you talking direct mail, email? Like what exactly are you doing
on which side, the broker side or the direct to seller?
Let's talk about direct to seller first.
Okay. Direct to seller, texting, cold calling, and mail.
Okay. And then on the broker side?
On the broker side, literally identifying a really good list, right? So for us, it's my backyard is my backyard. So I know a lot of people have just been around a long time, but as we enter a new market, for example, that I may not, we do market research to identify a market that we want to be in the Midwest, a lot of good matrix. And then from there, it's identifying the brokers who specialize in industrial for us.
Gotcha.
Those people who are there transacting, and then it's a function of either email or call to reach out to have a conversation to see if we're going to align with one another.
Yeah, cool. Yeah, it's interesting. So you and I have a very similar approach. We're a big proponent of direct mail, and we have identified a very specific bucket of properties that we're interested in here in Connecticut mostly, and it's direct mail. And then as we start to build a relationship, the cool part about a lot of these properties, especially the mom and pops, is when they do all their filings, they provide their phone number, and most people don't have an office number or a home number anymore. They have a cell phone. So when we figure out that, when we identify that number, then it becomes a whole lot easier to do digital marketing, right? So we use, we're obviously very careful about the do not call and litigators and all that,
Sure.
But the fact is that, we do voicemail drops, cold calling, and text messaging as well. So
yeah, same, very right in the same methodologies.
Yeah.
And it works.
It does, right? I can't say I coined it because I'm positive I stole it from somebody, but great deals are created, not found, right?
You're exactly right about that.
Yeah.
Yes.
So as far as brokers, one of the things I was at, Jake and Gino.
Yes, I know of them. Yes,
yeah.
Absolutely.
So I'm not a student of theirs or anything like that, but I've always been intrigued by their approach because their value system is very similar with the one we have here. And they were talking. They had a MM5, which is their multimedia or multifamily mastery event that they have every year. And so I went with a friend of mine. And just to, hopefully grab a nugget or two from every speaker, right? Which, mission accomplished. And one of those speakers was Bo Berry, who is a heavy hitter.
I'm almost through his book. Yes.
Yeah. So I just finished it. Right.
Okay.
And so, he walked the crowd through his broker contact and contact management process, his operation. And I was fascinated by it. And, the fact is that, the folks that I know that are much bigger, we're a relatively small player, but, the folks that I know that are much bigger than us all do this, right? They all have that outreach program to the brokers, specifically the hitters, right? The ones that are doing big deals.
Sure.
And it fundamentally changed our business coming back, and this was 6 months ago, right? So it's not even. And it was one of those, we used to do it and then we stopped doing it. And now I'm watching this expert up on stage telling me that we need to do it. And of course we need to do it. Oh my God, we've got to get this, back into our process flow. So
I'm going to ask you a question. What did he say anything outside of the book that was a nugget for you that you're like, that's great. I got to implement that.
So the thing that kind of hit me between the eyes is he said, every syndicator or investor that I know that has more than $50 million under management has a cadre of brokers who feed them deals on a regular basis. And on top of that, then he kind of breaks down, okay, he's got 3 tiers of brokers, the folks that he are really good and he enjoys working with, the folks that are pretty good and semi-active, and then the folks that, he doesn't quite have a relationship with. And so he kind of stepped us through, I'm talking to the tier 1 folks at least once a month, hopefully a couple times a month. Tier 2, I'm talking to them once a quarter. Tier 3, I'm hitting them, a couple times a year. And until they decide they want to, change levels in our world. Right. And so, I'm sitting there. So I'm a process guy, right? I'm a recovering technology guy. So I'm sitting there flow charting this as I'm listening to this guy in my notebook. And, it was absolutely fascinating. So
no, it's
granular detail. It was a very generous presentation because he gave us a lot of gold.
At the end of the day, just to move this further, it's about relationships. People do business with people. What the old saying is, right? All things being equal, people do business with friends, and all things being unequal, people still do business with friends.
Correct.
And so how do you get to that relationship and able to build it in such a way that it's meaningful and fruitful for both parties, and you can forge a relationship? And as you know, so many of us live and breathe this business. It consumes us, right?
Yeah,
there is, unlike a lot of businesses, but there is a commonality between us to begin with, that we love this. You just love real estate, and a lot of agents, the exact same way.
Yep. So true. Yeah. People, like you said, people like doing business with people they like and respect. Correct. And know they can close and all that other good stuff. But so one of the things you mentioned is earlier in the conversation was about, knowledge and growing. Right. And so, I'm curious, I say this all the time, leaders are readers, right? Yeah. But reading these days can mean a lot of different things, right? It's more intake of information, podcasts and videos and, on YouTube or ebooks or books or audiobooks or whatever. And so I'm curious, how do you sharpen the saw? How do you consume that information? And specifically, I'm curious, other than Bo Berry, who we established, who else are you paying attention to these days?
That's a good question. I take in a lot of podcasts.
Okay.
Just like you, I've got a podcast too, but then, part of the reason I had I started doing a podcast a little over a year ago is just so I can talk to interesting people, understand what they're doing, connect, is there an ability to do business with people? And then also, I asked the same question you just asked, right? Like, what are they reading so that I can make a note and go?
Exactly.
Yeah.
Yeah. I'm asking you to create my reading list.
I know. So for me, it's a podcast list. I'm listening to guys, what are they doing to raise capital?
Yep.
What are they doing? For me, it's industrial, although we still own multiple asset classes.
Yep.
It's what is somebody doing from an industrial standpoint? How do they analyze the deals? From Bo's standpoint, right?
Sure.
How do you get to go? It's how do you find deals? How do you fund deals? What's that look like? And then, I'm talking to, and still do, a lot of bankers in my backyard. I talk to brokers. I talk to brokers nationally because I want to get a pulse about what's going on. I know it's not a reading list, but it's an understanding. And so, given the recency of the couple of the bank failures, it's plugging into podcasts, understanding what that means, what's transpiring, and then what does that mean to everyday life on the street, and my bankers and in the backyard.
Yep. And so I'm curious what those bankers are telling you in terms of, you read, the Wall Street Journal, there was an article about, the cataclysmic drop off that's coming. Right. But I'm not sure I believe it because I'm not seeing banks are capitalized appropriately. At least certainly the large ones are. Credit is slowing, but it's not turned off. Right. I'm curious what you're seeing in terms of this recession that's potentially coming.
Right. Yeah, no, or I would echo exactly what you just said. But the one point I'll make is that from the bankers I'm talking to, small banks and regional banks, they're concerned that their deposits are going to leave. I mean, I'm not saying in totality, but in a measurable way. Because what did the U.S. government prove to us? That some banks are too big to fail, right?
Yep. True
Some
statement.
banks are, and there's a whole bunch that are not.
Right.
And so, given that some banks are too big to fail, I was at a conference last week, and there was a guy on stage. He does the hard money loans, and he said, "Hey, some days we wire out $40 million." And he said, "We're with a regional bank, and we got a lot of deposits with them, right?" He said, "We have to move because
risk management perspective, right?
It's a risk management perspective, and that means I have to withdraw a lot of money from that bank."
Right.
And I got to go to one of the big banks that have been proven to be too big to fail. And so I think what you're going to see, it'll be fun. We're recording this just after the quarter has ended in Q1. It'll be fun to see when the FDIC reports drop for Q1, what happened to deposit levels for the small banks, the regional banks, the little bigger ones, and then the big nationals to see where are their deposit levels.
Yep. Oh, that's interesting that you pay attention to that. It's something, admittedly, I never paid attention to until Silicon Valley went under.
Sure.
And then I'm like, oh my God, this is a whole, issue, a whole set of data that I need to pay attention to. It'll be exactly the reason you were talking about.
If the FDIC would come out and move their 250 threshold up higher. Because 250, if you're a business and you operate, 250 is nothing. I mean, there's a bunch of businesses 250. I mean, that is just not going to. It's just exactly right. Just didn't cut it. So that's where for the listener, you're thinking, oh, these, how many mom and pop, how many individuals like me are going to move out? It's not just us as individuals. It's the businesses that are moving the big significant dollars in big chunks.
Right.
That move because they just have too much exposure. But I think if the FDIC, if they come out and at some point move that number to 500 or something bigger, certainly it would provide a higher level of comfort to a whole bunch of people through this country to help subside some of the unsteadiness, uneasiness that exists.
Indeed. Yeah. And, and then the risk pushes over to the Fed, which I'm okay with.
Sure. Well, the risk pushes to the Fed, what I'm okay with too. First, everybody pays in. It's an insurance policy. Everybody's paying it to a degree anyway. And second, it's their job to regulate this, right? The goal would be, can we have no bank failures because there's such, the regulation isn't overbearing to the point where they can't do business or can't make money, but the control procedures are in place.
Yes.
And you have stress tested the environment in a vacuum, not in real life, to see how it plays out.
Yeah, and it also solves the potentially erroneous perception that these banks are on these smaller banks are built on a house of cards, right? And
sure.
Is that true? Probably not. But perception's reality, and the fact is that the reason that $1 worth $1 is because you and I agree on that.
That's right.
So it's the second that Ed stops believing that $1 worth $1 becomes a problem in this in the economy. So I agree with you in terms of raising that from the FDIC's perspective. So in terms of other things that you do, non-real estate related, how do you like to spend your time when you're relaxing with the family or off throwing a hook in the water or something like that?
Yeah. So I've got 3 kids, 17, 15, and 13 now. They're busy. I mean, I got 2 in high school, 1 in 8th grade, and they are busy. So, I mean, what's going on right now? My junior is looking at colleges. I just, in fact, scheduled his last visit for another university, which I think he'll have it narrowed down to 2 and probably make a decision sometime early fall.
Wow.
And he plays sports, so he's active. My daughter, the second one, we were just talking about this before he came on. She's in softball. She does everything. She's like overachiever in the house in terms of trying to be involved in every sport that exists. And it's me going, no, honey, pull back just a little.
Yeah,
you don't need to.
That requires sleep. Sorry.
Yeah, exactly. So she's got softball. And so and then my youngest is in a couple of different sports. It's just active. So when that's heavy. When we're not doing that, wife and I love to travel. I love to deep sea fish. It's a lot of fun.
Yep.
You can see me at the backyard barbecue too. Love to sit there, smoke a giant piece of meat that's way too big for far too many people.
Yeah. Good times. Good times.
Yeah.
So Neil, I know you have a book coming out, and so I'm curious if people want to get in touch with you and learn more about your book, which will be published between the moment we're talking here, the moment that this thing goes live in a few weeks. Yeah. So tell us about the book and tell us about how they can get it.
Yeah, my ebook. So it's published on ebook, How to Passively Invest in Real Estate in a Changing Economy. Myself and then Ava in my office, we sat down and we're like, all right, you know what? I'm getting a lot of questions. We've got an environment that we just haven't seen, since the 82, 83, somewhere in the early 80s. The 5-year treasury, for example, the 5-year treasury doubled in the last year. It has never doubled in the history of existence of the 5-year treasury. We're in a changing economic environment. Now, there's still opportunities out there. There's still plenty of opportunities if you can identify and know what an opportunity looks like, and then put some risk measurement procedures in place to go, all right, how do we get through 3 years, 5 years, 10 years? Right. How do we plan for this in the totality? And so that's why I came and decided, let's put this together. So how to passively invest in a real estate in a changing economy. So you can get that on my website, legacyimpactinvestors.com.
Okay. And Neil, if they want to get in touch with you to learn more about some of your projects coming up, do you in terms of the investors, 506B, 506C, how do you work with investors?
Yeah, it just depends. Well, in both, it just depends on the particular project in which we happen to be raising money for on the particular deal. Okay. So yeah, both. The best way is, 2 spots, legacyimpactinvestors.com. You can find me there. You can connect me, reach out. We can get on a call with myself or Ava, or connect with me on LinkedIn. That's the absolute best place.
All right, cool. Well, Neil Timmins, thank you so much for your time today. It's a pleasure to see you, my friend, and congratulations on all your success. And thank you for your time today.
Thanks for having me here, Ed.
All right. This has been the Real Estate Underground podcast, a Clark Street Capital presentation. Thanks for joining us. If you're enjoying the show, please remember to subscribe and share it with your friends. If you'd like to learn more about Clark Street Capital and our upcoming projects, please join our investor club at clarkst.com/join. Until next time, happy investing.